Hello and welcome to Premier Study in Investing. It's great to have you. Thanks for stopping by. Today we're going to be looking at some Bitcoin ETFs. There were recently change in the SEC rules that allowed a lot of spot Bitcoin ETFs to come into existence. This is January 10th, I believe, 2024. And so this is about 6 weeks ago. I'm going to be covering some of the expense ratios on those because, teaser, you can see this graph here. I've been working on really coming to terms with how much money is lost with fees over the course of an investing lifetime, so 30 years. And it's even worse or more dramatic, you might say, over 40 or 50 years, which is possible for some of us to have money invested for that long. You can see from the 0.04% fee all the way up to the 2% fee, the red is denoting amount that is lost to fees. And so coming back to this Bitcoin ETF situation, I realized that I needed to, using our method, run with the Grayscale Bitcoin ETF. It's ticker GBTC. And the reason I needed to run that is because I needed 5 years of monthly data in order to do what we do with modern portfolio theory. If you didn't know, we do have quarterly, basically Excel sheets that come out that are the model for letting you optimize the return and the risk that you want to use. If you go to our website, we have an old model that you can use for free. Anyways, going back to what I was saying, the expense ratios are a huge killer, or you should just say the expenses. So let's jump over to this article by NerdWallet, and we'll look at some of the expenses compared to especially the high rate that was being charged for Grayscale over the last few years. Okay, so here we are at our article, 19 Bitcoin ETFs, their fees, promotions, and holdings. So I like this article a lot. I think NerdWallet tends to be really great. So Wednesday, January 10th, the SEC changed their rules, and now we have these new spot Bitcoin ETFs, exchange traded funds. Most of you know exactly what those are, but if you don't, they kind of trade like stocks basically. You can buy them through any brokerage. It takes 2 days. If you buy it, it takes 2 days before you can sell it without like violating any rules. So you can switch in and out of these things fairly easily, typically very, very low. I mean, by low, I mean a few dollars, $4 or $5 in transaction fees, if any at all. I'm guessing most of these aren't going to have any transaction fees. I did switch today, but I don't remember what the fees are. So here's the tickers. I'm not going to read all the notes, but you can see if we start with the fees, this is 0.19, so this is the lowest from Franklin Templeton. I ended up buying one from Fidelity, this one here, because the fees were waived until August 1st, 2024. I didn't have to go looking, but maybe after August you might sell out of that and come down here into this one that's lower. Anyways, it's up to you, but so ARK, Kathy Wood's ARK, looks like they have one, iShares, Van Eck, Fidelity, Wisdom Tree, Invesco, Valkyrie, and Grayscale. So this is the one that we ran in the modern portfolio models that we've been using. So if you're purchasing that, just realize I had to use that one in order to get that 5 years of data, like I said. But the expense ratio is way higher than any of the rest of these, right, at 1.5%. So maybe it's because they were the only kid on the street, the only player in town, or whatever you want to say, so they were able to get away with those high fees. But now that really isn't the case. I don't really see, or I'm not aware of any huge advantage that you get by holding it in Grayscale. So that's all I'm going to really say about that. I do have a video on Grayscale ETFs and just their general approach and some of the different assets they have. So you can find that in our playlist. There are also some related products. Okay, so same article, just a little bit further down, top 9 Bitcoin strategy ETFs. And first thing I want to point out is that the expense ratios are much, much, much higher. Mostly invested in Bitcoin Futures, also invested in Global X blockchain. Okay, this is in mining companies, so that's kind of interesting. The big ones that I've owned in the past is Mara, M-A-R-A is the ticker for that, and Riot, R-I-O-T. These both seem to be like very large Bitcoin miners. I think Mara had a bad fourth quarter and Riot had a great fourth quarter, from what I remember. That was 2023 Q4. And then you can see some of these other things. Futures, fees will change. A lot of futures here. This one has Bitcoin and Ether futures, as does this, as does this. So there's some other, products and strategies, but 1.33, 1.24, 0.95. Again, it's just a teaser because I have really been drilling down into how profound the accumulated losses are when we're paying fees. And it's something that they never taught us in graduate school. It's nothing that I came across in the first few years of really looking into investing on my own, running this channel. And then now that I've seen it, it's like, wow, this is really huge. So just stay tuned. Probably the next video after this, I'll do a kind of deep dive on how those fees work out and why Vanguard did so well. Vanguard was one of the first companies to basically create the ETF. Before that, it was all actively managed mutual funds, and Vogel founded and was a longtime chair, I think CEO or chair, I can't remember which one, but was with them for a long time, headed up their organization. Recently passed, I think, in the last 2 years. But they were very famous for launching ETFs, and recently I saw on LinkedIn that assets under management in ETFs are now greater than assets under management in mutual funds. And it's because of the expense ratio. They also taught us in graduate school, like very early on, that in portfolio management, the research has been done, and very rarely, very, very, very rarely, I'm talking about like maybe just as a matter of consequence, is an active fund manager able to outperform their benchmark, meaning that you might as well just buy the benchmark. So recently did another video with Charlie Munger and Warren Buffett from Berkshire, as they like to say, as Warren likes to say, talking about how great it is to manage your own money because of how improbable it's going to be that actively managed fund like a mutual fund is going to be able to really do anything above and beyond what we could just do buying the index. So stay away from the fees. That's basically the point of this, and it's hard to stay away from them if you don't know what they are. So, okay, well, obviously NerdWallet, you can just Google it, Bitcoin ETF, and it'll come right up. So thanks so much for joining me. We'll see you next time. Bye.